Good afternoon, everyone. Welcome to this webinar today, hosted by myself, Lisa Ashford, CEO of Ethex and Energize Africa. I will shortly, excuse me, be introducing you to a panel with a wealth of experience, and we're going to be discussing how to choose greener investments in uncertain times. How can investors get peace of mind that their investments aren't funding destruction? So a fairly emotive title there for us to follow. I think it's particularly interesting at the moment. There's lots of discussions in the press around ESG investing, and some of you may have seen the interesting debate caused by HSBC's head of sustainability, who had some choice comments in a recent conference. If not, look them up on the news. Anyway, so without further ado, I'm going to introduce you to our crowd today. So thank you everyone for taking part. So we have Charlene, Cam, Adam, George and Julian with me today, and if we could go round in that order, that would be great. If you could just give yourself a quick introduction, tell people who you are and what you do. So Charlene first.
Yeah, sure. So I'm Charlene Cranny, and I'm the founder of Economy of Good, which is a financial education platform for ethical consumers who want to make money in a way that aligns with their values. And I'm also Volanz's sustainable finance specialist, which is a think tank and advisory firm specializing in systems transformation for a more regenerative future.
Thanks, Charlene. Cam?
Hi everyone, I'm Cam. I'm head of product at The Big Exchange, which is a digital platform co-founded by The Big Issue that provides people with support, access and choice to making change through their own financial decisions. So in particular for this session, it's providing people with access to investments that make a positive impact on people on the planet through your own ISA or your junior ISA. Yeah, looking forward to speaking to you all.
Adam, next, I think.
Yeah, thanks, Lisa. Good afternoon, everybody. Adam Robbins. I'm Senior Investor Relations Manager for Triodos Investment Management, part of the Triodos Bank Group. My role is to work with Triodos Bank in the UK, as well as the IFA and intermediary community, talking about the impact investments that we have at the investment management organisation. And we have been at the forefront of impact investing probably for about 40 years. And I'll leave it there and just say thank you for taking the time to join us today, everyone.
I think I'm next, Lisa. I'm George Latham. Hi. I'm managing partner at Web Asset Management. Web is a specialist boutique investment business, and we only do one thing. We run a single global equity strategy, which is focused on investing in companies whose products and services are solving global challenges. So we've been doing that for about 17 years, last 10 years building Web Asset Management as an independent boutique in this space. And we've long worked with Lisa at Ethex and also with Cam and the team at The Big Exchange, and old friends of Julian's and Adam's as well. Thank you.
Thanks, George. Julian?
And I'm Julian Parrott. I'm a partner and independent financial planner and advisor with Ethical Futures. We're independent financial advisors based up in Edinburgh, but advising clients all across the country these days, but specifically with a values-based proposition. So we've been doing that for 20 years or more in terms of providing advice to get you through your financial journey, but doing that in alignment with your personal values.
Lovely. Thanks very much, Julian. Just some housekeeping from me. So welcome everybody. You can listen to us obviously live. This is being recorded as well. There is a chat function, so if you have any questions, please do post them through the chat. I will feed those into the discussion as we go. And we will hopefully have some good time for Q&As. If there are any interesting resources that we reference, we'll send those round after the event. Just to remind everyone that this is not a financial promotion in any way, and we can't answer any specific questions relating to your own personal financial circumstances. So just a reminder to everyone there. So just as an intro, more than ever, people are worried about their money and where it's going and what their pension is being invested in. Every single person who holds a pension is an investor, even though they don't always believe themselves to be investors, and they may not know where their money is going, or they are becoming increasingly concerned about the idea that their money might be being used for things that doesn't align with their own moral compass. Russia's invasion of Ukraine has prompted a number of discussions regarding whether their pension fund is in fact linked to Russia in any way in terms of the organizations that the fund is invested in. I think there is a sort of philosophical debate going on around arms. Obviously, the UK is providing some arms to the Ukraine. How does that fit in with the whole idea of ethical investing? And with the latest IPCC report, forcing the ongoing fight against climate crisis is very much at the forefront of our minds. People are asking, am I unwittingly funding fossil fuel companies? The whole concept of greenwashing is becoming a major issue. People are very hungry for information, and yet, despite transparency getting a lot better within financial services, it is still quite difficult to get to the nuts and bolts of what is the investment, what's the proposition, and how does it align with my values. So we're going to be getting into some of those nuts and bolts a bit today and talking about some of those bigger, wider questions around greenwashing and what that means for you. And we'll be talking about individual perspectives from the panelists here. So with all of this discussion in the news at the moment regarding the Russian invasion and this sort of decade of action, race to net zero, and concerns around a number of the financial institutions and banks continuing to invest billions of pounds yearly in fossil fuels, where do we find ourselves right now? How do we orientate ourselves in that ecosphere? Charlene, that's a big question, but coming to you to give your sort of like first standing point, and then I'll come round perhaps in the order that we went round on the introductions.
Yeah, I mean, all I can say is like back up what you're saying there. People are really, really worried. You know, not to add to those worries, there's a looming recession. It was even reported by a US financial institution that a group of banks and investment firms are bracing themselves for an upsurge in civil unrest in the US, UK, and Europe because of energy and food prices driving the cost of living up. It's also just been reported that the UK finance industry could lose over 300 billion if they're not prepared for the transition to net zero. And a lot of that could well be passed on to customers hitting, you know, the most vulnerable of us. But on the upside, this is exactly the time to think about investing in green to protect yourself from those climate related potential losses, and also start to think about investing in the energy and agriculture and infrastructure that we need to increase our energy and food security and bring all those costs down. So this is all those living costs down. So this is a great time to have this conversation.
Cam.
Yeah, I can jump on that, and yeah, I echo the sentiment that Charlene just mentioned. And I'm a product guy, so I come from a bit of a different perspective to an investor or an advisor. I speak with people on a daily basis who are investing their own ISA on the big exchange or putting their savings into investments. And I speak with customers weekly, if not daily. And what I hear and what I'm seeing from them using is that people are being really conscious about how they're using their money and what they're doing with it. And that sounds kind of really self-explanatory and obvious, but both spending, as the cost of living is going up, so that's from a budgeting perspective, but also it's spending within the local community to support businesses that are doing things to increase engagement between whether that's your local community or just people, and of course avoiding brands that you don't associate with or don't want to associate with, and that's no different to them investing. It's the same concept. People want to make sure that they are doing something good or better for the future, for them and for future generations with their money. And what we're saying is possible, it becomes so much more powerful because it's a deeply personal decision. And when we do get on to talking about a kind of greenwashing and duping people, that's why this is such a key issue for people and why we need so much more information. Because when something is personal and we don't meet the expectations as an industry, it can be so much more harmful for us in the future.
Thank you, Adam.
Yeah, I mean, look, I'll just echo what's already been said, to be honest with you. I think people are just becoming more and more aware of the impact that climate is having on their daily lives. We're seeing it, as you said, with issues that are taking place globally. It's being reported in the papers. We have energy pressure from what's happening in the Ukraine, and the squeezes that's creating, as well as the rising energy prices here. So people are more aware of what's happening now more than ever. There's access to information, and there's a lot more being put out from the industry, and it can be confusing for people. It's an easier choice potentially for people to consume in a more conscientious way, but when it comes to things like banking or investing, it can be tricky. And as both Cam and Charlene have already said, and I'm sure George will echo as well, people can inadvertently be supporting things that go against their values. And I know that we're going to be coming on to this shortly with the topic of greenwashing and how we avoid it and what we can do to help. But again, there is a real potential now with the solutions that exist in the marketplace and the awareness for people to be able to allocate their savings, their banking and their investments to do something more meaningful and align with their values. So whenever we do these panels, I think there's always a lot of background that's quite depressing and quite worrying, but actually there's an awful lot of good things to be optimistic about as well. So yeah, I think there's a lot that can be done.
Yeah, I'd add, just echo what both Cam and Adam have said, but I think it's worth just sort of having a bit of a sort of historical perspective as well, because obviously a lot of this we could have talked about for many years. That you've been able to invest in ethical or green funds for a long time, and some of us are older than we even look. I'm not pointing any fingers at you, Julian, but you've been around even longer than I've been in this space for 25 years or so. Julian, you might have been even a little bit longer. But I think there's been a real sea change in the last few years, in the last sort of 4 or 5 years. That it's this area, the interest in this space has gone from being niche to becoming much more widely felt, and I think that's, obviously, and as people have bought organic or people have changed the way they consume for years, if not decades, but often there's been a barrier to that moving into how they look after their money or how they invest, and so ethical investing may have been around for a long time, but it's been a fairly niche activity. And we're going to talk about greenwashing and the risks that come from suddenly everyone moving into this space. But what has happened over the last 4 or 5 years is that the amount of the options people have for how they can express their own personal values through the way that they invest have become much broader. They're much more available to be able to do, and I think it's responding to a real realization from a broader set of consumers and a broader set of customers that they do want to see this move beyond how they consume in their general life into how they use their money as well. And I think that is reinforcing for this moving through a tipping point and being here to stay. So I'll stop there because we're going to come on to some of the issues around greenwashing and the like that come along with that through this conversation. But I think it's worth saying that over the last few years, we really have seen a big development and change in this industry.
And yes, I'll sort of echo that, George. And yes, thank you for pointing out the grey hairs. Yes, I've been around quite a time. And I think the interesting thing is that the narrative has moved in those last 20 years or so, and that, in a way, ironically, although there's might be choice, it also contributes to this aspect of confusion and what things mean and where you get them. Although encouragingly, there are increasing aids to help navigate that aspect. But kind of what I mean by that is sort of 20 years ago, largely you had funds which fundamentally worked on an exclusion basis. They avoided things. And perhaps some of the funds did something a little bit positive, but it was largely, what do I not want to invest? And the narrative has moved. The narrative, and we've certainly seen that over the years, that it's moved to wanting to empower money, whether it's like through direct activities and community-based investments, such as you'll find through Ethex, or whether it's through major market activity. And with that has come particularly in the last few years, a plethora of different styles and approaches, brandings, names. And that's when you get into the greenwashing area, and where you probably need to have trusted friends and trusted sources of information. And I suppose some of those are around the table just today. And that's the challenge for the investor, is making sense of those disparate approaches.
Yeah, great. Thank you, Julian. Okay, so obviously we are focusing quite a lot on the green side of things today, but let's just open it out for a moment to talk about sort of more of the social aspects as well. And we have rightly been called out that this is a all-white panel speaking today, which is not a great representation. So actually that raises a question around investment committees and thinking about the types of organisations that are invested in and brought to the funds that we're talking about today. Adam and then George, have you seen changes in your own organisations that start to make your investment committees and your management more diverse and representative, and therefore will that bring sort of deeper change to this otherwise quite traditional sector?
Yes, so as an organisation, we're obviously a pretty large business, although we are a boutique investment manager as well. We have a pretty much 50-50 split, male-female. So it's very healthy, and that's across fund managers and board, right through the whole staff. So that side of things is very strong. We also have a significant focus on the emerging market, so the developing economies as well. And in order to run the portfolios for that part of our investments, we have lots of individuals and investment professionals and research analysts that are from those countries and parts globally as well. So we actually have a pretty good diversity across the board. That said, is it perfect? No, we're constantly working on this. It's something that we are building out as we go. We have people leading within the business on diversity and inclusivity internally. And obviously, as a result of that, it's also a topic that comes up in the discussions, the engagement and the stewardship that we have with all of the investments we have within our listed portfolios, so the companies that exist on the stock exchange, etc. So yeah, and we are pushing all of those companies to be more focused on this as well, because of, you know, not only is it the right thing to do, but actually from a materiality point of view, the research shows that it adds value as well to a business and the thinking and the strategic output of a company. Thank you, Adam. George?
Yeah, I think it's a really important topic, and it's a good point to raise, and it's a good discussion to have, because I think, as Adam alluded to, this is one of those areas, and you know, one amongst many, where you can come at this from a kind of ethical perspective of saying this is the right thing to do and this is what people should do. But we can also come at this from the perspective of this is what makes us better. You know, we want to have, you know, we are a business that's focused on, you know, people and people carrying out research and carrying out and having debates and discussions. And if we all are the same and look the same and think the same and have the same background, we're going to have a really poor diversity of conversation, a diversity of ideas. And it's really important in an organization like ours, when you're an investment organization, to have a diversity of ideas, a diversity of thought. And that comes from people having different lived experience, different perspectives, coming from different backgrounds. And so, yeah, we want to, you know, it's really important to us to build an organization that is diverse from a gender perspective, that is diverse from an ethnicity perspective, diverse from a lived experience perspective in terms of backgrounds, socioeconomic backgrounds, diversity of thought, and sort of neurodiversity is really important. And so I think from all those spheres, and we come at it very much from the perspective of we will be better if we can build a diverse team that has better discussions and better input to the conversation from that perspective. Now, we don't create that by sort of you know, painting boxes by numbers. We create that by creating the kind of culture within the organization that builds the team that way and celebrates the team that way, working together as well. And we are able to sort of hang off some really useful sort of frameworks and organizations that are helping us to do that. So we're a founding partner of a group called City Hive, which is working in the financial in the investment industry, you know, to help investment organizations look at where they can improve and trying to push that thinking across the whole industry. And that's a really important organization that we're really proud to be a part of. And we're also, you know, Web is a B corporation or a benefit corporation, and that gives us some really useful frameworks again to help us to think about how we build the kind of structures we put in place, how we recruit, how we work with the team, how we celebrate people from and how we encourage people from different backgrounds to contribute. So it's a lot of it for me is about trying to build the right kind of culture within the organization.
Thanks both for that response. And I think there's probably more discussion we could have there actually. And one would hope to one of the other questions around transparency on these things, diversity data, living wage accreditation, et cetera, that becomes more and more transparent over time. And I'm sure, Cam, you've probably got some thoughts on that. I'm not going to come to that right now, though. That might be a future topic. Charlene, I wanted to come back to you just to talk about greenwashing, what it is and how to spot it.
Yeah, so just put very simply, greenwash is when a bank, investment fund or platform exaggerates their positive impact to the world, to the public. So typical examples might be public net zero commitments or commitments to achieving some of the sustainable development goals while heavily funding and investing in companies causing the problem. Another example might be a big shiny sustainability report, and then you realize it's about 5% of what they do or invest in. So we don't have strict standards or labels in the UK. So at the moment, we have to do the digging. We have to investigate to see if we're getting the real deal. And I've got 6 very simple tips on how you can approach that. So the first one is to look at language. Terms like sustainable and impact are when you want to do more good in the world, better than ESG. So the UK Investment Association has got clear definitions of what those all are, but I always use the example of tobacco. A tobacco company can have a high ESG score if they use kind of water efficiently or they've got a diverse workforce, but ultimately their product still kills people. So, you know, what I'd like to think we're all trying to do is do more good rather than less bad. So that's language. The second thing to look for is to see whether the provider as a whole is committed to a positive impact, or whether it's just a couple of their options, because that will give you a sense of just how seriously they take their impact on the world. Third, unless it's super obvious, ask for a list of the companies that you're investing in, and don't just accept the top 10, ask for all of them. And they're not used to getting these types of questions, so they might not have it in a kind of easily accessible, readable form, but that's their problem. You should get that information. Fourth is to ask how they prove their positive impact. What's the evidence? And this will generally be easier for managers and platforms that invest directly into companies and projects. But for those on the investing in listed companies, so companies on the stock exchange, you might want to then, fifth tip, ask for their company engagement and voting records. And it's not just looking at how they're voting for existing environmental or social shareholder resolutions, but whether they're submitting resolutions of their own for voting. And some of these resolutions might not be that good. So there might be a reason they've voted against a social or environmental proposal, but ask exactly why. Ask why it wasn't good, and ask what they're going to submit to make it better. Share Action actually have recently reported on the voting records of some of the biggest fund managers, so you can get a peek there to see how well people are doing. And then finally, 6, there are a whole range of green impact and sustainable investment funds and approaches, and you know, there's a lot out there, and there should be something for everyone. So look for those funds that talk about the issues that you care about. It could be water, it could be forestry, it could be achieving one or more of the sustainable development goals. There usually is something out there for everyone. Just think about what your values are and have a look for those. I hope that gets you started.
Great. We love numbered tips. I'm sure we can circulate those afterwards as well for everyone. Cam, can I just ask you your perspective, because Big Exchange is a relative newcomer. Yeah. So if you could just,
Yeah, absolutely. And I think a lot of what we do is taking those 6 tips from Charlene and trying to make it easier for you, because you know, if you sit back and think about the 6 things that you've been asked to do there before making an investment, it's quite a lot of work. So you're being asked to go through prospectuses, you're going to be asked to go and find company information. And you know, what we want to do is, yes, we want to make sure all the information is there, but we also want to make it easy and manageable and accessible. And as George mentioned, remove all the barriers that are stopping people investing in the first place. So yeah, I completely agree. And what we do is we rate funds. We rate funds like, you know, Webb's funds and Triodos's funds. And we look at kind of 3 things. We look at the companies, the funds invest in, what they do, how they make money, and where are they making that money? Is that having a positive effect on certain industries? You know, is it investing in resource efficiency? Or is it on the opposite and investing in things like resource extraction or mining or tobacco, for example? And create a kind of comparison to another fund. And that way someone can look at, you know, a fund like, you know, Webb's or Triodos's and go, okay, I could compare this one to another one that I might be able to choose. That sounds fairly straightforward from the outset, but the test that we do for every fund is it's got a lot of inputs, and we ask for a lot of information from fund managers. And that question about, and George is smiling there because he knows we do, and it's quite robust. And for me to think that if people weren't doing that, if there wasn't independent verification, it's really important. Asking individuals to do that is a real stretch, and we need to make it as easy as possible for all that information to be accessible. I kind of see it.
Good, thank you. That's super helpful. And I think there is, fair to say, a growing number, small but growing number of accreditations and discussions around standardized frameworks, which no doubt will be extremely useful over time. Okay, so I just wanted to ask Adam and George perhaps to briefly outline some of the key elements to the propositions that you are managing, not as a sales job, but just trying to sort of differentiate and pick out some of the things that make your funds different to those which are just fairly standardized. And then I wanted to pick up on a couple of the questions that have come in around, well, ethical funds may exclude extraction and mining, but what about where we need things like lithium for batteries and rare metals, etc. So perhaps we could come and challenge a little bit and talk about that afterwards. So if I go to George first, if you and then
sure. Well, I'll try and pick up on some of the things that Charlene was saying. But also just to look back, as Julian said, that when we started in the when this industry started in the sort of 80s and 90s, or probably before that really, a lot of it was focused on what we don't invest in. And then in the sort of 90s and early 2000s, then there was more focused on ESG, as Charlene said, looking at how companies were managed. But the problem with the ESG, or environmental, social and governance sort of framing, was that it ignored what companies do in terms of what they sell and where they generate their revenue from. And our starting point nearly 20 years ago was always, let's try and reframe what we're focused on. And we're looking for, our long-term prognosis is we think we're in the early stages of a major economic transformation to a zero carbon and more sustainable economy. And we want to invest in companies that are enabling that transition to have. So our entire focus is on businesses where the product and service is actively solving a sustainability challenge. So we're looking at what is the problem from a sustainability perspective, either an environmental perspective or a social perspective, and how is this business, through selling more of its products or services, helping to solve that problem. And so that definition of solutions to sustainability challenges has been really important. So we're invested in companies where there's what we call a lockstep relationship between them, their unit sales growth, them growing their revenue and selling more stuff, and that generating positive impact on either society or the environment. And there's a kind of key point of differentiation there, because it's about finding the companies where that product is actively regenerative or positive from the impact it can have. So a lot of people, a lot of the sort of darlings of the ESG space will be companies who've got good policies and practices for how they operate their business internally. Charlene used a tobacco company, but even a company like Unilever, which is a great organization, they run it, wins all the awards for being the most sustainable company, for how they run their operations, how they look after the workforce, and how they treat suppliers and all the rest of it. It's got very good ESG company, but ultimately, the business is successful if they sell more ice cream and shampoo. Now, ice cream and shampoo, as of themselves, are not generating the solutions to the sustainability challenges we face. Amazon gets high ESG scores because it powers a lot of its operations through renewable energy, but ultimately, Amazon's success is driven by encouraging us to consume more and higher consumption and higher resource use. But when these companies are trying to transition their operations to lower their own footprint, they're usually spending money to buy the products and services from the portfolio companies we're more interested in, which are the ones that enable them to lower their own footprint. So we're looking for businesses that are enabling that transition. We sometimes call that the impact economy, because they are enterprises that have a positive impact through their products and services. The other aspect of impact that we talk about is what we can do as investors on top of that. So our contribution as investors, either through engaging with the portfolio companies that we invest in for them to be the best they can be, to be the best governed, the best their own internal footprint and the like, or engaging at a policy level, at a societal level as well, in terms of and a market level, to try and create change. Because ultimately, as a B corporation, as a mission-oriented investor, we want to see finance used for a positive purpose. The finance industry, your savings and investments should be put to use to drive the change that we need, to be part of the solution to the major challenges that we face, because finance is linked to real economic outcomes in the end, and that's really important that we can try and bridge and make that connection.
Lovely, thanks. And Adam?
Yeah, okay. So, I mean, as those of you who know Triodos and Web will know, we have a very similar approach to this. We are very like-minded, which is always reassuring. But I'm just going to latch on to something George mentioned, and it's a key term. It's something that we aim for as a business, and that is finance change and change finance. So, you know, that is absolutely key. We share a similar view to Web on the fact that we're a B Corp, and what we look to do with our funds is exactly the same. We're looking at companies that are going to be driving progress, are creating some form of additionality. So if they were not there doing what they do, would that have a negative impact on us having a sustainable transition to a better future? So that's what we're looking at. We don't look at using ESG scoring or kind of those ratings, because as George and others have articulated, you end up potentially with tobacco companies or miners or banks that are funding fossil fuel extraction because they have a good ESG score. So we're not interested in those kind of organizations. We want the ones that are driving progress and have a positive impact. What we also want to make sure we do when we construct our portfolios for the funds is also then look at making sure that those companies that we analyze and find a strong impact narrative for don't then have any form of negative impact. So we don't want them to be doing any harm. And this is where it's also very interesting, because there are a number of companies out there that on the one hand do appear to be having a positive impact, but they could be contributing to something that actually is not having a great impact elsewhere. So you could have something that's very climate oriented, but it's got a huge negative social impact. And this is a big challenge at this moment in time with net zero on the horizon, and a real strive to decarbonize. There is a big focus on climate, and social can be missed out quite a lot, especially in some of the mainstream funds as well. So that's something else to be aware of, especially if it's of value for you. And then of course, we the same as George and the guys at Web, we tend to find that the companies and the organizations that are producing products or services that are helping the global transition actually have better business models as well. So financially, from a materiality point of view, they also stack up. So this is not philanthropic investing. This is financially viable as well. And then just to go back to some of the points that Charlene highlighted, I echo all of those, Charlene, as 6 great tips for people. An organization that solely invests for positive impact across its entire business, all of its funds, is definitely something to consider. For us, as opposed to Web, we also have the banking element as well. So clearly being able to bank with an organization like Triodos, where there is no funding of anything that's having a negative impact, is also extremely important as well. And linked to that, and all of the investments in our funds, is full transparency. So again, it's possible for yourself, Lisa, or anyone listening today, to go onto our website and be able to look at the holdings within the funds that they could invest in. So it's all there, along with all of the history and proxy voting and how we've engaged with our companies and what we're looking to drive to drive them towards and get from them. And the last point I'll say as well, and I'll acknowledge you here, George, because I know you guys do this really well as well, the prove it. So, proving it is really important. So we, as the web, have impact reports where we talk about what the funds have actually achieved, the underlying investments, how they've contributed towards a more sustainable future, perhaps links directly to the sustainable development goals as well. So it's actually possible for somebody who's invested in the fund to look at this for a particular
Oh, I think we've lost Adam for a minute. Let's just see if he comes back. No, let me just carry on then. I'm going to move on to my next point then. Perhaps I can talk for a moment, and then if Adam comes back, I can hand back to him. So we were going to also make a point about, sorry, Adam, we lost you for a second there, but we're going to carry on. So to the question earlier, I think, what about those companies that are involved in activities that are perhaps extracting useful elements that are used for products? And I think what we're saying here is that these type of funds are much more additional in their nature, and they are looking to be investing in organizations that have a positive impact on planet and people, rather than just avoiding the bad stuff, so to speak. And from Ethex's point of view as well, we are generally talking about funds here, but sitting alongside that are opportunities to invest in direct investments, which obviously would only sit within a well-balanced, diversified portfolio, which we'll perhaps come on to next, Julian, when we talk about tips for a greener investment portfolio. But those direct investment opportunities can give individuals the chance to 100% align their investments to their values and see the tangible benefits on the ground, because it may be a local project, it might be community-based, or it may just be something that is entirely cause-driven and supported by that individual. Anyway, so I want to have time for some questions. So Julian, I'm going to come to you first regarding tips for a greener investment portfolio, and then we will come to some of these questions that are coming through.
Okay, thanks, Lisa. I'll try and whiz through this. 4 tips for advice and planning on investment portfolio. I think fundamentally it's important for the retail investor to step back a little bit from what the funds do and which particular issue they're interested in, and just look at the basics first and think about the purpose and time horizon of their actual investment. That will dictate to a certain extent whether you're putting it in an ISA or a pension, or whether you're investing directly. It might also impact upon the type of assets you choose. So are you looking for a more generalized investment that invests in major markets, or do you want something that's a bit more mission-led? And therefore you might find investments that sit on Ethex, such as Lisa's mentioned, which are giving you direct focus into a particular area. And contingent, or those decisions to a certain extent are contingent upon your risk tolerance and your capacity for loss. What does it mean to invest in that money? How do you feel about that investment? And indeed, what's your time horizon? Can you lock up for a long period of time? Or if you're really just looking for something relatively short term, then you should really be looking at bank deposits such as Triodos or Ecology or something like that, where you've got sort of safety and security and access. So those are kind of fundamental financial planning things that you should look at before you move on to the investment. I think then if you look at the how, what I really think, and Cam alluded to it earlier on, is this area of kind of what's your experience and what's your enthusiasm or capacity to engage in the process. Charlene's gone through some of the processes and things you can do to look at investment funds. It can be very time consuming, it can be very involved, it can be overwhelming for people. So there's essentially, I would say, sort of 3 approaches which you can adopt. If you feel you have the confidence, if you feel that you want to be involved in this area, then DIY platforms, there are plenty. Big Exchange will let you invest directly in Adam or George's funds. So will Ethex, I think, certainly on George's. There are other platforms which will allow you to do that. Ethex will allow you to go in and pick individual funds. I've seen a note about, it's all big businesses and such like. Is that an issue that you should be considering? There are then offers where, again, people like Big Exchange will sort of curate a portfolio for you. They will have a model that will help you guide your assessment of risk. There are other model portfolio providers as well who will give you a packaged investment approach based upon particular styles and investments to look at that. Or you can go and speak to a trusted advisor, somebody who spends their time doing that job all the time. I saw a note about how you find these people, where UK Sustainable Investment Finance Association is a good place to start. Organisations who've committed to following through on that area, they will have links into that. We act as your interpreters. We speak to George and Adam. We look at the funds. We do the same sort of due diligence area, so we can start to understand some of that language and try and translate your values into that. And values is really the next thing. Again, step back. What's important to you? Quite often it's like, well, I want to do renewables, or sometimes it's fairly vague. I want to do good that we're advised about. Think about it. What matters to you? What's good? What's bad? What does an investment look like? Is it just a specific area, or is it a much broader range of market economy that you might get through an investment fund, or do you want to be very focused into sort of community grassroots support? So think about that. Think about what your red lines are. Again, it can be difficult to get that information. And I did a quick search just to see what was available as a retail investor. And to be perfectly honest, there's very little that gives you the ability to dig in underneath, other than going direct to company websites. And that is probably one of the best places to start and see, does that business appear as though they're walking the talk? Are there all the things that Adam and George have alluded to? Is there a rationale to the process? Is there a sort of thought process that's going through? That's the sort of thing we look at when we're doing due diligence on funds. Ideally, you will find that there's a natural element of fact sheets on funds which list top 10s. That's kind of just like an industry standard, but will the fund divulge more about where they're investing and why, and all these things that have been mentioned again about case studies. You can get a feel for the business. What I would say is that ethics, sustainability and such like are in the eye of the beholder. And that's one of the reasons why the regulator, the FCA, has suddenly woken up and taken interest in this area, because there are so many different terminologies: ESG, sustainability, responsible, impact, ethical, flying around now, that they're starting to look at how they manage that and give you some understanding as an investor what the fund is supposed to do. And finally, just look at the commitments. Again, B Corp, living wage accreditation. One thing that I think is often missed and often undervalued is that you look at a fund and say, oh, well, it's got Tesla or Amazon or whatever else, but the amount of work that these guys do in terms of actually getting down to the nuts and bolts and picking through a business, challenging them, voting, working on AGMs, etc., it's incredible. And if they're really good, they'll tell you about it. If they're not so confident, you'll have to hunt. So just some general tips for you in terms of how to go about looking at setting up a portfolio.
Good, thank you, Julian. And I think the link to the website, the UK SIF website, is in the chat, and we can send it around afterwards. I think there probably will be a growing number of IFAs who are more well-versed on green and sustainability issues as time goes on, but there is an incredible amount of experience out there with some of the key players at the moment, which hopefully you can find within that directory. So just a comment regarding, questions that are coming in. There's a question around, can we keep up with inflation? What about returns versus inflation at the moment? And there is always obviously the question of, well, actually, for green funds or ethical funds, am I having to forego return because of what I'm investing in? George, do you have a comment on that?
Yeah, I mean, markets go through cycles, and we get cycles in terms of what's popular within markets and what's less popular. And in the short term, the inflation rising and interest rates rising is seen as bad relatively for companies that are growing versus companies that have nearer term cash flows. And so we've seen in the last 6 months, we've seen quite a sharp rotation in markets. I think the long-term conversation about can I keep my is there a tension between investment returns and doing good? It kind of to some extent this is future gazing, so there's no promise about any of that. But the proposition that a lot of investors in this space have is that if there is a transition to a more sustainable and zero carbon economy, there are some companies that are likely to do better in that kind of context, and some companies that are at risk from that transition. And a lot of investors in this space are trying to get behind the companies that are part of that future and on a very, very long-term view. Then the proposition is that those companies are likely to do better. So there's no promise for that. You can't you can't you can never promise about future returns. But the logic is that there's no logic to the idea that there should be a conflict between the two. The two things should not necessarily be one at the expense of the other. And without wanting to say too much more than that, then maybe I'll stop there.
Okay, thanks, George. Can I just ask a point about accessibility and come to you, Cam, around this, because there is a sort of trade-off potentially between going through an IFA and having all of that knowledge base versus going direct to a platform to do it yourself. Cam, what's your sort of view on accessibility and how people could use Big Exchange?
Yeah, it's an interesting question because to clarify, we don't provide any advice. Customers come to us, we provide information needed for people to make decisions and try and make it as easy as possible for them to make it. But again, that's a personal decision based upon the needs of the individual. What we really try to do is take away some of those barriers to say that it's very difficult to do this, or take away the myths like George mentioned that by doing this or by making this decision on your own you're going to be worse off, which isn't necessarily true. So around accessibility, it's without straying into the world of advice, which I'll leave to Julian to talk about and to say what an IFA can provide an individual more than an individual website like us. What we can provide is speaking to you in a language that you understand, a customer service desk that can answer your questions when you want to, or when or any information like that. We can provide you the same investments and the same reports, and ultimately we provide you with an impact report for every single holding. Not to mention the fact that I've seen a lot of questions asking about how can you understand that these IFAs who may have been around previously and are moving into sustainability. Much like George and Adam, like we're based in this. This is our being. We see this as the only thing that we do. We're not moving into this because this is a cash opportunity. We believe in the evolution of impact investing to the point where, you know, this is going to be a thing that the majority of people do, because there is both a financial benefit, there could be both a financial benefit and also a benefit for society and the planet. But yeah, I hope that I'll probably pass on to Julian to talk about, you know, what an IFA could provide that is different to what the big exchange is.
Actually, I was going to ask a slight sort of sidebar question to Charlene.
Sorry.
You know, do you anticipate that we might find ethical robo advice tools being developed in the future that might perhaps bridge the gap between, you know, a full IFA and a complete do-it-yourself? Don't know whether you have a view on that.
Yeah, I mean, I don't know, but probably is my answer, and only because what I'm seeing in government and in the FCA and even providers is that this stuff is growing. It's becoming so much more important. You know, everyone's talking about ESG. ESG isn't where we want to go. We want to go to impact and sustainability, but all of that is coming, and there will be labels that will have the UK taxonomy on what we can call green or not, which is going to help with, bashing some of that greenwash. There's so much coming down the line. And including in a few years, potentially advisors having to ask their clients about their sustainability preferences. So it's a big thing. There's lots going on, and we're going to see huge changes coming over the next couple of years.
Thank you for that. So I did sort of raise the question, but I don't think we quite nailed it. So Adam, I'm going to come to you. Would the Triodos funds have organisations that do extract materials as ethically as possible, or is that a no-no?
For us, that's a no-no. So when we talk about this building of the portfolio, as I mentioned, we start off with this kind of impact narrative, and companies that are having a positive, driving positive progress. Any companies that are involved in the extraction of things, we are yet to find anybody that is doing that to a significantly, sustainable standard. So it's not something that we are invested in now.
Yeah, thank you for the clarification. George?
Yeah, sure, happy to add to that. I mean, we spend a lot of time talking about or analysing and assessing the positive impact of a business. We want the business's positive impact, what's the way in which it solves a sustainability challenge, the way in which that business's products and services make the world a better place, to be at the core of our reason for investing in a business. Now, there will be there's no such thing as a pure play, in terms of there's no business that has no negative footprint. So it is really important that we understand, what is positive about a business's product and service, what positive outcomes it can generate, and what costs are involved in us getting that. And so we do need to understand the net of that. But having said that, so that, as the person asked in the question, you need metal and plastic to build a wind turbine. We invest in wind turbines, so we are investing in a business that uses metal and plastics. We need to understand, and we need to engage with wind turbine producers as to how they source that. We need to understand that their use of that metal and plastic is, the total net of their production and their products is still a positive, even incorporating that negative that's the net on the balance. And so we've still got a net positive that we're aiming at. And so the analysis we have to do needs to be comprehensive, it needs to be holistic, and it needs to be realistic that there are costs along the way to achieving these positive impacts. So we don't have any investment in any miners because we have found no miner that has a net positive impact overall, that's a pure play in that space, that is where we can say that the positive, the benefits of what they do outweigh the negatives. But we are involved in the supply chain. We need to understand that, and we need to be realistic about that, and we need to also incorporate that into our analysis to know that the total is a net benefit.
Great. Thank you very much, both of you, for those responses. As we just come to the end of the session, I guess I just wanted to focus on one question, which I think probably speaks for many people. You know, what happens when my workplace pension is a fixed provider and it doesn't necessarily meet my expectations in terms of investing in positives rather than just least bad. Charlene, what to tell people what advice would you give them?
Yeah, the first thing is you don't have to accept the default fund. Speak to the provider and see what their sustainability range is, and then you can choose. You can certainly switch if that's what you want to do. Other things you can do is to ask how the pension fund votes at AGMs to create change in harmful companies it might potentially be invested in. You could ask them to partner with somebody like Tamello, who allows you to vote actually on your investments and indicate where you want those votes to go, how you want those votes to go. And you could also actually take a look at Make My Money Matter, which is a campaign organisation, and they have a kind of a green pensions charter that you can bug your pension about signing up to.
Yeah, okay, thank you. Someone said, I've switched from the default, but I'm still not happy. Oh no, well, unfortunately, we're not going to have time to answer everybody's questions today. George, did you want to say something?
I was just going to add one small thing to what Charlene was saying there, just in terms of, if you know, these pension platforms generally respond to demand. So if people ask them for a specific fund or more of a type of fund to be on their platform, ultimately they will respond to that. So we're available on the platforms we're available on because underlying the investors that use that platform have asked for our fund to be on it. And so, you know, obviously, you know, one voice may not be enough on its own, but they respond to a collection of voices and knowing whether there's demand on those platforms. So you ask.
Great. And I think actually as employees, we also obviously have a voice when we're collective in that voice. And I think increasingly, you know, it is everybody's responsibility to come together and hopefully try and promote some more positive change in terms of the types of decisions that your company that you work for. And if not, perhaps you're not working at the right company, I guess. Anyway, that's radical. Thank you everyone for your time today. We've got some more questions. Perhaps we will be able to answer some of them in a follow-up. And just thank you everybody for your time today. And no doubt there will be another one of these and we can take some more questions. So thanks again and have a great day.
Thanks so much.
Thanks. Bye.
Thank you.
Thank you.